Hello and welcome to the first topic in our basic trading series. What we want to do here is to establish some basic information about trading before we go into the advanced session. If you're here, you most likely are interested but very curious about what the business is all about, the business of trading, and you might have heard about trading, you might have heard about bullish market, bearish market, and all that. At one point or the other might have confused you. But what we'll try and do here is to take it step by step, make sure that you understand the basics, and then some of those things will begin to make sense, right? So let's jump right into it. Introduction to global financial market and terminologies. This is brought to you by Rally Trade. Rally Trade is an online brokerage firm. What we do is to provide brokerage services to traders, especially emerging economies. We do that with our technology, provide you the platform for you to trade, but also give you a lot of financial assets for you to trade on. Coupled with the fact that we provide very amazing and reliable support through our education arm, Rally Academy. Rally Academy is actually responsible for this trading resource, right? So what we'll do is to provide support, training, coaching to make sure that you become a professional trader. And when we say professional trader, not just it's somebody who has been trading for a long time. A professional trader, that's somebody who understands the business and can take profitable decisions in trading, right? So that's Rally Trade and that's Rally Academy. You're welcome. Let's move on. Well, we've been in Nigeria since 2015, so it's 9 years plus for us now. We have courses. We believe in education. What's one of our strengths? One of our core is that everyone can understand the concept of trading. Okay, and so we make sure to pursue education as much as possible. We always advise that, and before you go into trading your live account, you have as much education about the business, about the risk involved, how you can properly manage your risk, what it's, and a whole lot. But of course, we'll start with this simple step or this first step of basic trading, right? I like to begin with this quote. When you work on something that only has a capacity to make you $5, does not matter how much harder you work, the most you will make is $5. Okay, Mr. Ido gave this quote, wealth for all, living a life of success at the edge of your ability. Well, why this makes sense is because a lot of us are not lazy at all. We work hard. We spend our time, spend years working at something, slaving away at something, and it's not even the reason why at the end of retirement you do not have enough. It's not because you did not work hard. It's because you put your effort into something that is already at its limit. Okay, the best you can get, you work so hard, is your salary. The best you can get is your wage. Okay, but if you take a bit of your time and invest in something that has a huge potential to reward your effort commensurately, right? I think that would be a better decision, and that's where trading comes in, right? If you learn, it's something that rewards your effort. It's something that can give you quick, equal reward for your knowledge, right? Equal reward for your effort. And that is what trading is. Let's quickly talk about electronic trading. When we talk about electronic, the word electronic means that we are doing it over the internet, right? So it is trading, as you know, which trading is an exchange, right? Buying and selling. So it's buying and selling electronically. So buyers and sellers connect via the internet. They connect to a trading platform, and through that trading platform, they can buy, they can sell, depending on what they want. Okay, now you want to buy, let's use traditional trading, where you go to the market to buy groceries and all that. There is a meeting place. There is a meeting place. You know that place. You who's the buyer, you know that place. The seller knows that place. You guys meet there and you discuss prices. You buy and you sell, right? When it comes to electronic trading, buyers and seller meet through a trading platform. That trading platform is over the internet. That trading platform helps them to see what prices are, and they make their decision to either buy or sell at various prices, right? So when we talk of the global financial market, that's the worldwide online marketplace where we trade financial assets, the beautiful thing about this is online. It's across national borders. You're not restricted or limited by your geographical location. All you need is internet access, right, to take advantage of the global financial market. And because of that, this market is actually available 24 hours a day from Monday through Friday. Though we even have certain assets that you trade on the weekend, but generally trading is available Monday to Friday, 24 hours a day. And that makes it a very flexible business. And that's why it's something you can apply. It's something you can add, is something you can attach to what you do for a living, right? As an extra source of income, as an extra stream of income. Of course, we can't tell you enough how important it is that you have various or different sources of income, right? So trading is one of the most flexible because it's something that is always available. There are trading opportunities in the market 24 hours a day from Monday to Friday. So if you're a 9 to 5 person and you cannot even squeeze time during your 9 to 5, you can take advantage of the market after your 5, right? And that's how it is, right? So let's talk about what trading is in terms of answering some salient questions, some important questions. We have 3 questions. You might have different questions. What is going on? What is going on? But they are usually within 3 arms or 3 pillars. Number 1, what are we trading? What is tradable? You want to know what is it that we're trading? Because when I go to the market, normally I know groceries. I know that's what I'm buying. I know that's what I'm selling, right? Bags, shoes. I can see all those. What are we trading when it comes to this online business, right? The next thing is, who else is trading? When I go to the normal market, I can see the buyer, I can see the seller. We see ourselves, we address ourselves. But in this particular situation, who else am I trading with? And then the third question is, when and how do I trade? When do I trade? How do I trade? We will try as much as possible to answer these questions with this particular class, right? The first one, what is tradable? Now, before we talk about this, I want you to understand that money itself, as you know it, can take different forms. Money can take different forms, and money changes from one form to the other depending on the desired value. Money changes from one form to another depending on the desired value. You understand? Now, what does this mean? You know that you can actually get, you could have money in your account. You could have money in your account right now, okay? But you could decide to use that particular money, that cash in your hand, to buy maybe a Rolex watch or buy jewelries, right? Now, most people, when they do that, it's not just because they are flamboyant or something. It's because they do that because they understand that gold, jewelries which they've bought, carry certain value. It carries certain value. So what they have just done is converted that money from cash into jewelry, right? Some people take the money in their account and decide to buy a piece of land. They believe that the piece of land they are buying carries higher value than that money. So what they've done is they've traded their money for a piece of land. They've traded their money for a piece of jewelry. That is what trading is all about, right? So when we talk about what is tradable, we have different assets that can be traded, but these assets are broadly classified into 4. The first one is currencies. The second one is commodities. The third is indices, and then we have stocks. We have currencies, we have commodities, we have indices, and then we have stocks. These are different classes of assets that we can actually trade, right? Now, when we talk about currencies, what do we mean by currencies? Currency is simply bill of exchange, right? It's bill of exchange. It is that legal note, it is that legal tender that is generally acceptable for the payment of goods or services, right? That's it. We talk, if you've done commerce, you know about money, the attributes of money, right? It is a bill of exchange. When I give you cash, when I give you money, you just something, that money I've given you carries a value, right? And you give me the goods depending on the value of the amount of money I've given you, right? That is how currency trading. Now, when we exchange one nation's currency for that of another nation, what we are doing is what we are trading currencies, also known as Forex. We are trading currencies, right? When we exchange a nation's currency for another nation's currency, when we exchange the euro for the dollar, when we exchange GBP for the dollar, when we exchange GBP for JPY, when we do this, what we are doing is currency trading. The more persons want to travel to a particular country, the more of that country's currency will be in demand. The more investors come into a particular currency, a particular economy, the stronger that economy is expected to get, and the stronger the currency of that economy is expected to get, right? So the currency market is global, is decentralized. It's a global decentralized market, or it's over the counter for the trading of currencies, right? So currency market happens to be the biggest. Currency market happens to be the biggest market when it comes to trading, right? And currency trading is exchanging one nation's currency for that of another currency, right? So when you take your naira and you go to the money exchanger and you request for a dollar with your naira, what you have done is currency trading, right? When you take a British pound, right, and you decide that you want to use it to buy the dollar, or you want to use it to buy the Japanese yen, what you've just done is what international currency trading, right? What you've just done is currency trading, right? So let's talk about it. When we talk about currency trading, we have the ones we refer to as the big eight. They're the most traded currencies in the world. The most traded currency in the world. The first one is the US dollar. The US dollar, which carries the symbol of the USD, right? US dollar. The second one is the euro. The euro, right? The nickname for the euro is fiber. The third one is JPY, Japanese yen. Japanese yen. The third one is GBP, Great British Pound, also known as the cable, right? We have Switzerland franc, Swiss franc. We have US dollar. We have Australian dollar. We have New Zealand dollar, right? So these are the different instruments. These are the big eight. Big eight. Why we call them big eight? Because they belong to some of the top countries or top developed countries in the world. So you generally find out that these particular instruments carry the highest volatility of all the others because people are looking to trade it more. Let's move on. Now, we have three types. We have different types of currency pair. We have three different types of currency pair. The first one we have is the major pairs. The second one we have is the minor pairs. And the third one we have is exotic pairs. So we have the what? The major pairs, the minor pairs, and the exotic pairs. You remember, we're still talking about currencies. We're still talking about currencies. When we talk about currencies and we refer to major pair, what are we referring to? Now, when you pair a major currency with another major currency, you have a major pair. When you pair a major currency with another major currency, you have a major pair, especially when the major currency is paired against the dollar. Especially when the major currency is paired against the dollar. Okay, that's what gives you a major pair. And that's why you see my example by the far right here. Every example there carries the dollar. These are major pairs. So when you have a major pair when you have a major pair from the big eight, from any of the big eight paired against the dollar, that's when you get a major pair. Okay, but it's when you get a major pair. Now, major currencies are the cheapest to trade. Major currencies are the cheapest to trade that among currency pairs.